Hello, everybody. Welcome to the NC podcast. My name is Natasha Collins, and I am the founder of NC Real Estate, which includes its members club for property investors to come and build a profitable property portfolio that completely aligns with their goals. Thank you for coming back and joining me today. It's an absolute pleasure having you here. I have got one awesome guest. Just before we jump in with that, for those of you who've been following the story about my flat sale, which has been going on for too many weeks now, in fact, too many months now, safe to say at the time of recording, it completed yesterday. So I will delve into that at another time, but safe to say I'm going to stop going on about it for so much longer. But it's done. So I wanted to make that announcement because we are so relieved about that. It's been one of the most complicated deals that has ever happened to me. In my whole 10 years of being in the industry, it's been one of the lengthiest, one of the most frustrating, but we're there, we're over the line. So over the next couple of weeks, I will let you know more about that. In the meantime, I want to introduce you to today's guest. His name is Adam Vickers, and he's been investing for just over 10 years, since 2008. He also runs a local property investment meeting in Reading, which has been running for over 3 years. And it's a great group of over 50 property investors who get together on a monthly basis with awesome speakers. And I'm hoping to drop into one of them this year. So hi, Adam. Thank you for coming and joining me.
Thank you for having me. Really pleased to be here. Thanks, Natasha.
So today we're going to be talking specifically about joint venture partners and investors. But before we jump in there, I want to know, how did you get started in property investing?
Sure. So, I grew up in a family of builders. My father was a builder and my mum used to help out with the business. They had about a team of about 15, 16 guys working for them. And dad used to go and do quite a bit of building works. So I grew up around property from very early stages in my life. And then the recession occurred in the 90s, and unfortunately that wiped out most of the business. But I was hooked on property. And of course, property has always helped out my family. So I actually became a teacher. I taught music for a number of years, but during that time, I started building my portfolio because I had all seen the pros and all the benefits of investing in property. So
Mm-hmm.
unlike my parents, I didn't go down the building and development side, but I very much have a head for numbers and figures, and I focused more on the investing side. So that's how I got started.
Brilliant. So what does your property portfolio look like right now?
Yeah, so I started off with good old buy-to-lets to begin with,
Mm-hmm.
and now then went into HMOs. Then I've now gone into, I still do HMOs, but I'm looking for projects which have, you can increase the capital. So that's just site extensions or a bit of planning gain. We've just had some planning gain come through
Mm-hmm.
for another 3-bedroom house on another buy-to-let property we've got. I've got some serviced accommodation in the Midlands. We're taking on management of properties. We've been doing that for the past couple of years. So really, we're everywhere. And my role within the company now, I'm expanding my company at the moment. We've got five team members now,
Mm-hmm.
and my role is really looking more towards development and more bigger commercial projects.
Fantastic. So are you sticking, I know you said you had some in the Midlands, serviced accommodation. Whereabouts are you buying serviced accommodation in the Midlands?
It isn't actually buying it at the moment. So
Okay.
service accommodation has always been for me. It's something that I've wanted to trial. So we've been trialing out some stuff in the Midlands, some really small stuff, some small 1-bedroom flats there,
Mm-hmm.
very low cost to get in, just to try and get the feelers out and perfect the process. I'm always very systemized in my approach with any investment that I do. So we've been running that for about a year. And we've built up a great relationship with a couple of developers who go around the whole of the Midlands building out blocks, and they're going to be giving us first refusal. So we intend to be taking on another 16 places in the Midlands by the end of the year, and just continue really.
Okay.
Now we've built all the systems up on a few of them, and yeah, just expand that section of the business, like all the various different other areas we've got going.
Yeah. Okay. Fantastic. So Reading is really where you're investing.
Yes, yeah, very much. I always like to buy in Reading, so I don't really do any rent to rent or SA here in Reading. I like to buy because there's so many juicy projects, and it's such a good market to buy in.
Mm-hmm. And so what appeals about Reading? Is it because you live there, or is it because it is such a great investment?
Yeah, definitely. Living in an area, you're always going to understand the area better. And I work with quite a number of investors. A lot of investors come along to my property meeting, and a lot of them are newer. And uh, the areas where people fall down when they go to invest, it's always based on the emotional side.
Hmm.
And if people are trying to, I've seen so many people try to invest in other areas that they're not familiar with, and all the numbers stack, and all of the data on the sheet stacks. But it really, buying property, a lot of the time there's a strong emotional side, and that's where I see people fall down, or they don't execute quick enough. So I invest in Reading primarily because I feel comfortable with the area and I understand the market very well here,
Yeah.
and I understand my particular area very well. So that's one reason. But also, such strong capital growth over the past 5 years. We had 42%. That has petered off just with the current financial climate and
Hmm.
with no resolution to Brexit. But in terms of the tenant demand, I mean, I've had 1 month's worth of void on any of my properties in the past 11 years. So I've never struggled from that perspective. Really strong rental demand. I've had great capital growth, especially in 2010 to 2012 when there was an uplift in the market.
Hmm.
And the demographic in Reading, it's mainly your mid 20s to your late 30s, a lot of tech jobs. There's some seriously big players in terms of employers. So you've
Yeah.
got Oracle, Microsoft, British Gas, and so on. Heathrow, with their new runway coming in. There's so many different things going on, and Reading's been voted numerous times as one of the best places to live based upon house prices in relation to earnings and stuff like that.
Hmm.
So there's really, really strong demand here from so many different angles, a strong amount of capital growth and a strong amount of rental demand, and that's what I like about the place.
Yeah, fantastic. So let's get into the more technical stuff of funding, because I know that was something that we really wanted to talk about today. So, how did you start funding your property investments? Was that through savings and then you've built it, or have you always funded using JV partners and investors?
Yeah, actually, so when I first started, I got a bit of a helping hand from my parents. They
Hmm.
gave me a bit of a deposit money, and the first house that I bought was a 3 bedroom 1960s semi-detached house, which subsequently I rented the rooms out and I built a flat on the side and rented it all out. And by building the flat cost me around 25, 30,000. The uplift on the property was 70,000. And because I was getting strong rental income, it was covering the mortgage and giving me a profit.
Hmm.
So subsequently thereafter, I by adding that value, that's all I did thereafter. So I borrowed against that first property, used a deposit to go and get another property, and literally I've just done that again and again and again and built up the portfolio I have now, which is I've got 10 properties myself now, and I've never used any of my own money. In terms of, I've just uplifted the capital in a project and then borrowed more against the asset. Now, in Reading, the price is back. When I started, you'd look at around 200,000 for a 3 bed semi-detached. Now you're looking nearer 350 and above. And
Yeah.
so subsequently, you need a lot more in deposits. The mortgage companies won't lend out as much based upon the rental incomes you're getting.
Hmm.
And so I had to, I came to a crossroads, and it was either that I had to find an area where it was cheaper to invest in, or I had to deal with the problem of having more money, bigger deposits to buy here in Reading. And so I thought, well, you know what, I'm not going to give up or trade off the trying to find more money versus tenant issues, being far away from the property, not understanding the market, all the other variables
Hmm.
with regard to property that can go wrong. And so I started to learn how to raise finance legally and ethically. And subsequently, I now work with JV partners to acquire properties in Reading. And so I've been doing that for about the past 4 years. And that's why I'm attracted to working with JV partners, really, just because it is difficult to buy in the Reading if you've got less than, say, 120, 130,000 to put into a project.
Yeah. So, how are you finding JV partners? That's the first thing I'll ask, and then we'll go into that trust relationship thereafter. But how do you find them?
JV partners are interesting. I found a lot of them through my networking events. So I would advise anybody who's looking for JV partners, definitely keep going to your networking events and
Hmm.
keep talking about what you do. I mean, I've had a lot of JV partners approach me rather than me trying to find them.
Yeah.
And it's because they get to see you on a regular basis. They get to see how you're growing and developing, warts and all, by the way.
Hmm.
Problems you're going through and what you need to deal with, and people really, really like that. They can see that there's a human side to you as well. It's not completely infallible, and not like a lot of people online who claim that everything is an easy ride. I'm sure you'll be well aware. And so I get a lot of investors who like the way and my approach to things. And really, I would say a lot of it has come through networking events or through word of mouth. So JV partners I've worked with have then spoken to their friends and family or work colleagues, and they've come and had a chat. And yeah, it's just really snowballed from there. And so now I have more JV partners than I do deals. So they're gradually kind of in a queue, and it's great. It's given me access to quite a lot of funding, and my job now is just to go and find projects for them to invest in.
So are you buying them for you, or are you how are you structuring this deal?
Sure. So there's two or three different methods. I'll say there's three.
Hmm.
So I have three different types of investors. I have what I'd like to call um, the just loan money, quite frankly. It's 40,000-50,000 pounds they've got. They want to loan it out. It's 6 or 7% interest rates I pay. And also, just with regard to the FCA regulations, you can only do that with retail investors. So those retail investors who want to lend me some money, I use that for refurbishments or extensions and stuff. So that's my first investor, the loan
Hmm.
type investor. Then the second type of investor I have is the joint venture
Yeah.
investor who needs to be high net worth or sophisticated investor. And I will save the big, juicy projects for them. I don't really deal source projects on. Occasionally I will, but the vast majority of the time it's so complex to get a good deal
Hmm.
in Reading. There's so many different elements that you have to line up. It's not worth me selling it on for a 2-3% fee. It's just not. The projects I buy, there's usually 70,000-80,000 worth of capital in. There's no point in me selling that on for a small sourcing fee. And so the joint venture um, partners, that's where they will put the funding. I will bring everything else, and we own the asset 50/50.
Okay.
And we own the rental income will be split 50/50. So when we go to sell the project, they will of course get their deposit back, and then the profits after that will be split 50/50.
Okay. And so do you pay them any interest on that amount that they put in? So although
No,
you're saying you'll get your deposit back first, you're not giving them any additional uplift on that.
no. If they go and put in say 120,000 into a project, the projects that I invest in, like I say, they as a minimum they're 78,000 worth of capital in them.
Hmm.
It's usually higher than that, and so the return that they will get on their money within a 12 months or 2 year period is a lot higher, and so I don't pay them interest on that whilst
Okay.
it's invested in the project.
No, fair enough. Fair enough. Okay. So those are the first two, and what's your third?
Yeah, a third one is angel investors. So I work with a couple of funds and a couple of angel investors, and they're brilliant because they understand terms very quickly. They don't really need any hand holding through the process, and they're just very keen to get their money out there as quick as possible into projects, and they charge extremely reasonable rates. There
Hmm.
are some funders who want ridiculous rates and blood of your firstborn child and ridiculous things like that. But quite frankly, I don't like dealing with those type of characters. So it takes me a while before I sit comfortably with the angel investor. But yeah, I've got a couple of really good solid people I work with who are really understandable, and yeah, we pay them good rates of interest on their money when it's utilized in a project, and then we give them a good return on their capital once we've sold the project as well. So
Hmm.
yeah, they're very good in the sense of if you need to execute quickly.
Yeah.
Um, but there's pros and cons to each one of the groups. So it just depends on the project that I'm dealing with, depends on the group that I'll go toward.
Yeah, I can understand that. And because angel investors, actually, I had it in my mindset that they were traditionally, they invested in your business rather than they invest in properties. So my
Yeah.
investors who I use for my projects and when we're doing developments, very much are just individuals who want to do the joint venture for whatever it is that they want to do. Whereas angel investor, I never thought actually, it's eye opening for me today. I never thought to go to them.
Yeah, it could be a misuse of the term from my side, but when I say angel investor, very much it's somebody with a very
Hmm.
large amount of capital, with a reasonable interest rate. They very much want you to get on with the job, but they
Yeah.
they do almost feel like a business. So they're not necessarily investing in your business per se, but they want you to head buying numerous units, say for example, for them. And
Okay.
that might be like a separate element, like you've got a separate SPV where you're buying numerous
Hmm.
properties within that SPV for them. And so I suppose there's a blend between the two, but
Yeah.
that it's that type of investor who has very, very large sums of capital, who just want the money out there earning them,
Yeah.
earning quickly, and they're not overly concerned about lots of the other processes. They want to see the detail. They want to see that you've got a good team. They want to see that you've got insurances in place if you were to die, or you've got project management costs there so that you can hand it over to a third party project manager if you suddenly become ill or something like that. They want to see very much those business aspects, but they still want to invest just in the asset class that is property.
Interesting. Yeah, I know that they kind of live off their angel investments. That's why that's kind of their business scheme. Interesting.
Yeah.
So are you still finding those people at your networking events as well?
It's really interesting because those character types watch you from afar.
Okay.
So quite often the way that they've approached me, very quickly, here's a card, come and have a conversation.
Hmm.
They don't usually hang around for particularly very long, and you don't always spot them in the room. So that they're very, very elusive bunch, shall we say, and they will look into you and do tons of due diligence, and you won't even know it. So I find that just trying to find out where they are can be difficult. I would assume that they might be at golf clubs and everything else like that, but yeah, they've approached me so far, so I don't have any magic formula.
That's fair enough. So how are you building trust with these people that you're working with? Because I know for me, um, I I really have to have a close relationship with someone to even start working with them to use their money. And that's something that's been built up over years, not just a matter of months. And that's just my personal preference because of how I work. And I want to make sure that things are completely transparent and I know the agenda of the other person. How do you deal with that?
It's exactly the same, exactly what you've just said.
Yeah.
I say to any investor I work with who wants to become a joint venture partner that they have to spend at least 15, 16 hours worth of FaceTime with me. And they have to sing to the same values that I do.
Hmm.
I invest in property for my family. That's the background I've come from. That's what I do. And so I won't jeopardize any of that for example, a JV partner who is just super keen on putting their money in, trying to turn it around in 6 months, pull all their money back out, and there's not any long-term relationship. You know the types, and
Yeah.
I think there's a lot of crap education out there that which proclaims that you can make lots of money very, very quickly in the property game. What they call salesman rubbish, and you get a lot of investors who are like that, who have unrealistic expectations and unrealistic ideas of returns. And for me, I like to get to know. The one underlying factor about whether I work with an investor is I look at them and I go, do I feel like I could leave either one of my children with you? And if I have to get to that point before I will
Yeah.
work with them, because it's not, once again, it's not the logical side, it's not the data, it's not the numbers on the page that matters. It matters about, can I have a conversation with this person over a desk? Because ultimately there are going to be, there can be problems from time to time,
Hmm.
communication. And I like to, like you, get to know them over time and build that relationship and trust. I mean, ultimately, you're essentially going into, you're not that far off really from a marriage in a lot of things. You're going to be stuck together with a large asset, with a lot of money, with a lot of risk involved for a period of time. You need somebody who's got their head screwed on and somebody you can have a great relationship with.
Yes, and who doesn't lose the plot over small things? I've often seen investors who come and talk to me about this kind of stuff, and they're getting wound up by the little small details. But actually, sometimes you just have to look at the big picture and think, okay, well, how do I get out of this situation? How do I make this situation work for me? And that again for me is a very telltale sign about whether that person would even be worth working with or not.
Yeah, exactly. I when I have my conversations, the first three conversations will be very much about, oh, what do you do?
Hmm.
What are your values, etc. The next few conversations will be, I make my investors do dummy runs with particular projects. So I put them in front of them and say, how would you approach this, or what would you do? And then I have example scenarios of where things might go wrong, and I'd like to see their approaches,
Hmm. That's a
how they
really
would
good.
handle things, and it gives me a good idea because in this game, like any game, talk is cheap. People can say whatever they want to say, but I'm very like it's my background in teaching. I really like to watch people's body language, listen to the tone in their voice, and really get a good understanding of the real them rather than almost the on show them. And I think that
Yes.
and trust. And yeah, I'm the exact same as you.
Yes.
So one piece of advice I would say, and I see it happen too often at my networking event, is I hear of people trying to do joint ventures very, very early on with people that they may well have met at another property event, for example, but they've only known each other for 2 or 3 hours. And they all seem super keen to get going. Well, really, the measure of a good joint venture partnership is when everything hits the fan, are you still there, able to
Yeah.
talk to each other? The exciting part is always going to be there. Of course, it is. It's exciting and it's new. That's not what you want to be measuring. You want to measure what happens in the worst case scenario. And I've always been that way inclined.
Yes, because these things take time to build as well. That's it. Like that's one of the things that is big about property. I mean, as I was saying at the start, I've just had a deal that has taken what 8 months from start
Yeah.
to and it's been horrendously frustrating. But again, with property, that happens because you're dealing with other people. And that's one of the
Absolutely.
big things because you can never control what a buyer or what a seller is going to be doing because they have their own agendas. And so you have to work with that to a certain extent. And they can change their mind at any time. And it's about how you deal with that and make sure your whole team is on board too.
Exactly right. Exactly that. I had a deal with a JV partner. We had a couple of deals which unfortunately fell through. And then the deal that we completed on in December last year, it took 12 months to get through because
Mm.
there were 7 or 8 people in the chain. So
Yeah.
exactly that. It should have been a 2, 3 months project. And it ended up being a lot longer. But as I explained to the JV partner, I said, well, we've got it for a very good price. The land values in the area are increasing. So I said, we may as well wait because we're earning money because we've got it all secured on a contract
Hmm.
anyway at set purchase price. So what's the problem? And he's a lovely guy. Get on really, really well with him. And yeah, he loved that approach. So sometimes I find that actually reframing it a lot of the time for people in different lights and looking at it from the positive and the pragmatic side can always help. But exactly right. There are so many variables in this game, from financial markets to exactly human nature in itself, which, well, who knows what happens at any one point in time with that. And trying to keep it all together requires um, a lot of thought
Patience.
and a lot. Exactly, yeah, that's exactly it. It's patience. Absolutely.
So, we're going to wrap this podcast up in a few minutes, but Adam, can I ask you top 5 property investment tips? I'll put you on the spot with this one, but what?
Okay. Sure. Top 5 property investment tips. Only invest in an area that you know like the back of your hand. That's number one.
Mhm,
Number two, make sure you build long-term, lasting relationships and appreciate the fact that it could take you months before you get, for example, a JV partner or a decent broker or anything like that. But realize you've got to put in the graft and effort for a number of months, and that may not involve you getting paid. So that's number two.
mhm,
Number three, the property game depends on which part of the property game you're in, but usually it's a bit like feast and famine. You'll find that you spend tons of money out on a project and you're not going to get your money back for 18 months. So make sure that you really focus on what I would say, trying to run your business on the bare minimum as possible as well. Number four, make sure you treat everybody in the process with respect. That ranges from tenants to brokers to the cleaners to gardeners to anybody. Make sure that you get on really well and make sure that everybody's heard and listened to. You'll
mhm,
find you have far fewer issues, whether that's management or buying or anything along those lines.
mhm.
Um, and number five, property investment. I suppose I should really focus actually on property investment tips. Uh, the best way, the best deals that I've ever got was from understanding people's needs and giving them a solution that suited their needs.
Mhm.
Too often do I see investors walking in going, how can I get it below market value? How can I reduce this? How can I do that? Well, actually, it's got nothing to do with you. It's got to do with the seller. So if you suit their needs, they will come down in price. They will give you longer terms. They will allow you to do options. So many other things if they feel like they're cared for and listened to. So that is where I get the majority of my deals from just taking the time to care and listen. And that's with agents and with sellers alike. So just spend the time trying to help others more than you help yourself, and the universe will pay you back in kind.
I like that. That's a really good tip to end on. Well, thank you, Adam. Thank you so much for coming on this podcast. I appreciate it so much.
No worries. Thank you very much for having me.
Thank you. And thank you everybody for listening today. If you want to find out more, head on over to my website, www.ncrealestate.co.uk, where you can have a look through all of my blogs and you can listen to more of these podcasts. So don't forget to subscribe and leave a positive comment. I want to hear from you what you're enjoying and what you want to hear more of. Thank you again for joining us today. I cannot wait to catch up with you again soon.